Well, this is Pat Walker at MissionWinners.com, and I'm doing a training coaching video for everybody. One of the things I like to do, and I do this at the live meetings that we run and the teaching events that we have, is study charts. But one of the things that I think are very important as far as tactics are concerned is show a chart before something happens, not after the fact. Why? Because then a perceptual bias enters into the experiment and the observation. You say, well, that's easy. I'll just look for, that's easy. Versus training our eyes and mind to look at a chart before something happens and then experience it as it does happen. One of my degrees is in psychology, and so it's just a good perceptual filter lesson for us. So we're looking at BYND, BYND. All right, we know what they do. By the way, I will tell you, this stock is in a great group, A+ rated group, and last quarter's earnings were up last quarter's revenues are up 175%. It meets the criteria, the constraints that we have when we look at stocks, when we look for winners. So we're looking at BYND right here, Beyond Meat, this week. And you can say, well, look at this bouncing up. And again, it's got great revenue growth. And again, I stress, it's in an A+ rated group. It's in the top 10 groups. So here it is. You can say, well, okay, this got a really good write-up. It's got great numbers. It's in a great group. I can see this little base right here, little shelf. Perhaps if it takes out the highs of this bar, we could buy some if the volume's good. Advance it 1 bar daily. You're looking at this, saying, okay, I can see the setup. All right, I'll advance it a bar. It gaps up. It goes above the open right here and takes off. We bought it right here, and I can document it. We bought this stock for 73. It was running. We bought this stock for 73.42. 73.42. It was lifting into the open, so we bought it. Did we buy a lot? No. Because, boy, you should buy a lot. No, it's not a long base breakout. You always have to measure risk. It's a shorter pattern here in a new issue, so you don't do as many shares. So we bought it right here, taking out the highs of this bar. And it closed strong on a pickup in volume. That's good. The high on this bar is $80.75. You can say, how do you know that? I want to show you something. You see the H right there? H, look right there. Just keep looking at that. When I put my cursor on it, the high on that bar is $80.75. So we bought some down lower. It's moving up. And we said to ourselves, if it takes out the highs of this bar with good volume, we'll buy some more. The next day, it does this, moves up above here, and we bought. It gapped down, dropped, and we bought more. What did we get filled on that at? $80.86. The high on this bar was $80.75. We had a buy stop in. We got filled at $80.86. We bought more. The stock starts to run up on heavy volume. Now, put it in context. The market's not in the best shape. Market's in correction. So it's like, oh, I guess I'll just hang on to this forever. No, it's a new issue. It's a bit loose. It's got a great product, but things are loose. Price action in stocks is loose. Price action in the market's loose. You manage it. You manage it. You could sell some into strength running up to here. And we did. We did. Did we sell it all? No, don't do that. But take something. It's a new issue base. The market's whippy. We adjust all these things into consideration on how to manage it. Advance it a day. Oh, look at this. It gaps up. This is beautiful. Everything's great. Right in here. You can see that? May 16th. What did we do when it ran up here and it tailed off a little bit? We sold a little bit more. We sold some more into strength. You could say, boy, if it shoots to the moon, you're great. But if it doesn't, you have nothing to show for it. So you take some. Does this, but it does it on low volume. This is the 17th. The 17th of May. What did we do with it? Nothing. Just sit tight and see what happens. But do you see that line that I have drawn there? That's a line that we'll be cautious with. And that's where it's at right now. So we own it right here. We own more right here. We sold some into strength up here several times. And now we let it work. By the way, when it lost the lows of this bar, see the low of that bar? When it lost that today, we had sold a little bit more. No day trading, no 5-minute chart. We're looking primarily daily chart and hourly charts. And we'll see what happens with it now. See that little line right there? There's a trigger line right there too. That's how you can slide into a stock and manage it. Manage it. I wanted to share that with you. I hope that helps you. Do we still own some of this? Well, yeah. Yeah, we're in good shape. We're in real good shape. I'm down here and here. We're in good shape. Are we going to get lazy with it? No. You know why? It would really tick me off to not have sold any and to see this thing round trip all the way back down. Could it happen? Well, sure it could. Sure, we don't know the future. We live in the now. What do? We manage it. We just manage it. I hope that helps you. Just a good chart study. I'll go back again. Right here, right there, taking this out, and you manage it. I hope that helps you, as I stated. And again, our first buy was taking out the highs of this bar. Gapped up and ran, and we got filled on those first buys at 73.42. Right about there. And I can live with that. I hope you have a good weekend. I hope this helps you study and learn how to handle, invest properly with a new issue. That's my goal, teaching it. Thank you very much.